Hi there, it's Bill with Smart Trades. Today is Tuesday, March 6th. It's just after noon Pacific time. And as always, if you'd like more frequent updates, please visit me at smarttrades.com. I do have a newsletter. I update that pretty much every day, either via Twitter or through email updates, and usually put out a fairly major report at least once a week. Also, please like us here on YouTube as well as on Facebook, and help support the production of these videos, which is time consuming and just takes a lot of work. At any rate, let's get into it. The S&P 500 as well as the other stock indices, I believe, have topped. Whether that's a long-term or intermediate-term top remains to be seen. There is an alternate count, which I'll show you in just a second. If you'll remember in the last report, we talked about A equals C, or ABC1 equaling ABC2 around the 1375 level. The high close was around 1374 and change. The print high was just above 1378, which happens to be 1.618 times A. Again, A, B, 1.618 times that A comes in around 1378. So actually we hit both targets, but it depends on which data you prefer to use, whether it's the close only or the intraday high. But we came within less than a point of both the 1375 and 1378 targets. Those targets were updated in my newsletter. Here indeed is that alternate count. Here's again that A equals, this is the A equals C, or ABC1 in the other chart. In this case, we've got a 5-wave structure going up. It's certainly still possible that that we're going to eventually work this out. I don't favor this count, but the place to watch will be around 1300 even basis, the S&P. That's a small previous fourth wave possibly, as well as a nice even number. If we break 1267, that breaks this count because we'll have an overlap with wave 1, and that's an Elliott wave no-no, as I'm sure you all are familiar with. That said, regardless of whether we're going to go back up or not, we should decline to about 1300 in my opinion. First things first, let's what we want to see here short term is a corrective rally that fails below the 1378 high. And again, here are those targets, and we hit them pretty much, as I say, right on the nose, and that was originally posted, if you'll remember, on February the 3rd. I talked about that A equals C target at 1375. Little longer term, let's look at the S&P weekly here. Again, we had talked about this big pattern up being an ABC rather than a wave 2, as most people were calling it. And that's important to note, because if this is an ABC rally rather than a impulsive type C wave rally, it probably means that there's more corrective sideways pattern to come long term. That said, the other implication is that eventually we're going to get a C wave down. So we certainly can have some downside here, and indeed here is that longer term count. The ideal pattern, I think, is down to about 900 basis the S&P. There's also support around S&P 1000. And there's another scenario which I'll discuss in just a moment, and that is that we have a bit of a fractal pattern here. If you'll remember, on the May peak, we went up and we formed an ABC top. A lot of folks were calling this a major high, and one of my arguments against that was that we made that new high on an ABC pattern. Well, once again, we've done that, but on a larger scale. Now, one of the scary things about that is that the ultimate resolution of that pattern, the secondary leg down, was 2.62 times this point A here. And so if we have a 2.62 times this larger A to the October low, that's going to target all the way down around S&P 600. Now, we're getting way ahead of ourselves. We'll see if indeed that pans out. But an interesting thing is that level around 600 is also the extension of the two recent major lows. If you connect them with the trend line, that also comes in. Again, our count is that this is a huge corrective ABC, perhaps X, and then another ABC. So a drop down to that lower range, or even taking it out a bit and going down to S&P 600, does not upset the apple cart with this idea that we're in a very large sideways fourth wave pattern off of the year 2000 peak. One other consideration here is that if you'll remember, after we put in this ABC peak in May, we actually went sideways into the debt crisis decline in August. And so with an election year in the mix here, an ideal scenario, if indeed this fractal plays out, is that we may indeed go sideways for several months, even into next year, before we have the larger decline, be it down to 1,900 or that ultimate possibility of 600 basis the S&P. Google, very interesting. I think this was one of the precursors of the decline. Google, to me, is basically the bellwether of the internet economy. Google failed not only to make a new high, it didn't even get back to 62% as the broader market was making new highs across the board. Additionally, you'll notice here that we had a set of dojis. Depending on how you want to call these dojis, the bottom line is they're an indication that we're losing momentum. You have them, in fact, on consecutive bars, forming inside bars within each other, as well as having opens and closes at about the same price. Kind of a classic Toby Krabal range contraction, and the breakout obviously was to the downside and pretty severe. And the fact that it coincided with the top of this little ABC is sort of icing on the cake. Bank of America, I think a key player here. So far, though, it's holding support. There is a nice ABC 1.62 times A target up around 860. It's certainly still possible it's going to get there if we can hold on to the area around today's lows. Perhaps hold 750. If we start cutting through there, particularly if we get through 7, I would say look out below. Apple cut through its short-term trend line, but it's holding its longer-term parallel. I just drew a parallel to the highs, connected the bottom of what may be a wave 2 here, and we nailed that, and indeed we're still holding at the top of this what I've labeled a wave 3. There's a lot of argument here on how to label this and whether or not this is indeed the correct count. I'm not going to get into it, but longer term, and I've posted this chart before, there's a pretty clear 5 waves up on Apple on the monthly chart, and we're at the top of channels both on the weekly, monthly, and yearly scale. So definitely a bit of a concern here that we're topping very long term in Apple, and if that's the case, Apple, which has provided leadership to the upside, could provide leadership to the downside in a decline. Gold, once again, I was calling for an ABC bottom back in late December, and so far that's worked out. There is an argument to be made whether or not this is a 5-wave structure up, but I think it fits very nicely. You've even got a bit of a triangulation in wave 4. If that's the case, we need to hold about 1600. Perhaps 1630 is the ideal target for a corrective decline in gold. A drop below 1600 would concern me and make me wonder if indeed this at least short-term or intermediate-term bullish pattern is incorrect. Silver, an even nicer 5-wave structure off of the December low, a nice 5-wave pattern with a kind of triangulation in wave 4, holding up pretty nicely so far. The previous 4th wave support may drop down to about 30.50 and still look okay. A close below 30 in silver would be a red flag as far as this impulsive pattern goes. It doesn't break the pattern, but it's it calls it into question to my way of thinking. Crude oil. I tend to think that there's going to be a lot of saber rattling and so on and so forth, fear mongering. And the idea here is to push the price of crude and gasoline up for the summer driving season, up to about perhaps the 120 level. That would be a nice A equals C off of the 2011 lows. Bonds still stuck in a sideways pattern. Even with this big decline, they obviously rallied, but could not get above the top of their channel. More than likely, we are going to have a breakout eventually to the upside. Usually consolidations break out in the direction of the ongoing longer-term trend, which is still up, because this pattern off of the highs in bonds certainly looks corrective, is certainly a sideways pattern. This is a chart I posted in my newsletter back in early February, calling for a decline down below the 130 level, and then a rally up to test about 135 or 135 plus. We didn't quite get to 135. Here is the actual update, including today's action. It's still possible that you can count the rally in the euro as being in an uptrend, even though it is probably a corrective rally. That would target, if we have two equal legs up, the area around 136.70. I tend to doubt that it's going to get back up there, but as long as we're holding this parallel channel, it's certainly still a possibility. So, and also that is a scenario that could help U.S. stocks as well. Very important chart here, in my opinion. A lot of the major idea behind the grand super cycle bear market and deflation scenario is that the dollar is in a bull market. Well, here's a problem. The euro decline from the 2008 peak best counts as a corrective decline. It hasn't confirmed that. We haven't taken out the top of this B wave yet, but indeed it looks a bit like a triangle, and perhaps even a fourth wave triangle. The implication being that ultimately we still may make another new high in the euro before all is said and done. It's going to be a matter of years before all of this is resolved. That said, the bottom line is, again, the decline off of the highs from 2008, pretty clear, ABC. The rally back up, also looking corrective so far, so additional sideways in the scope of the very long-term pattern. That's consistent with the idea of sideways patterns in the stock market as well, and not a massive deflation, as a lot of Elliott waivers are touting. I've been asked about alternate counts on the S&P. This is a popular one that's started to sprout up as we started to make new highs. Folks started saying, oh, geez, it's a 1-2, 1-2, 1-2, and we're into a fifth wave to the upside. I've seen it from just about all corners of the Elliott wave universe, from the long-term heroes of Elliott wave to the newcomers here on YouTube. And to me, it doesn't make sense. We've got a 15 trillion in debt, a housing market that's in the dumpster. It's just the idea that we're going to go up in this count. I would say a minimum target of a 1-2, 1-2, 1-2 type pattern would be up around S&P 2000. I just don't see it happening. It's a possible count, but I don't buy it. Again, here is the basic count that I've been looking at for some time, and again, we've already hit that A equals C almost exactly, and we have turned down. I favor that is the case. If we start plowing through 1400, the next target actually is above 1500 on the S&P. This would not really upset the longer term pattern that I've outlined that much, in that you'd have basically an A up, B down, and 1.62 times A again comes in around the 1510, 1515 area. I don't favor it. I think we have a top in right now, but this is a possible scenario. And finally, and this makes a lot more sense if we are indeed in a kind of impulse wave, that we are carving out a huge diagonal triangle. It's way too early to know for sure, and but you could count this as an ABC1. In diagonal triangles, the the impulses can count as ABCs. If that is the case, we probably should hold around S&P 1200 and then make a new high. In fact, we probably should go somewhat higher here short term and perhaps test that 1500 level, drop down to that channel, which will come in, excuse me, in the low 1200s. And finally, here's the Dow. And again, reviewing the alternate ABC scenario where we have a 1.62 times A. In the case of the Dow, that 1.62 comes in around 14,200. So if we do go blasting through Dow 13,100 or S&P 1,400, then this is the scenario that I would tend to favor as the next possible idea. Anyway, if you would like more frequent updates, please visit me at smarttrades.com. You can subscribe to my newsletter there. Additionally, there's a link to Facebook. If you like us on Facebook, I'll send you out a free newsletter. And please, if you like the videos and you want to see more of them, like us here and tell your friends about them on YouTube, so that we can get more viewers and a little bit more support. And the more support I get, the more videos I'll make. So if you want to see more, support the site. Let us know that you like it and let others know that you like it. Anyway, thank you so much for watching. I really do appreciate it. Have a great day. Thanks again. Bye-bye.